Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really pretty interesting time in equity markets. Certainly that's the worst start to a year for US equities since 1970. When strangely enough, the equity market was down over 20% as well in the first 6 months, but then rallied pretty substantially by around 27% to finish the year small up. Now, certainly, while history may not repeat itself, it's just going to be very interesting now with the next round of earnings coming through, because obviously, certainly with the backup of prices over the last sort of 3 to 4 weeks, it's just going to be very interesting to see how the earnings sort of stack up. Added to which as well, you obviously got non-farm payrolls this Friday. Just going to be interesting to see that figure. That's expected to be around a plus 250,000 versus May's number of plus 390. But also as well, look for the revisions to previous months. But again, what's quite interesting is the backing up of 10-year interest rates on that 10-year note now is trading around 280. Now, a couple of weeks ago, that was trading around 320. So, at the moment, the US economy is still reasonably robust, still reasonable sort of job growth going forward and reasonable sort of GDP numbers. But it is appeared to be slowing, and certainly the fears of recession seem to be creeping up every day. And against that backdrop, obviously, so you've got the fears over the economy. You've still got the ongoing war in Ukraine. And also as well, looking a little bit further forward for the 2024 election, you've still got the ongoing congressional hearings, re the January the 6th riots. And what is coming out of that so far is, pretty damning for ex-President Trump. And that's sort of interesting because at present he appears to be the sort of leading candidate that the Republicans will put forward for the 2024 election. Now, what is quite interesting is you're seeing fears of sort of slowing economies, potential recessions. Oil has now dipped back below that $100 a barrel. So while obviously that's worrying because potential sort of recession fears, that is obviously good for economies as well because it does take some of the inflationary pressures out of the economy. In the UK, Boris Johnson again fighting for his political life after just narrowly surviving a vote of no confidence. You've now seen his health minister and his Chancellor of the Exchequer both resign over his handling of the government. They both resigned, really in sort of protest over his sort of, handling of events, and really is a clear sort of vote in no confidence of his ability to be able to govern going forward. Now, certainly previously he's managed to sort of pull a rabbit out of the hat and survive, but it'd just be very interesting to see if this is the case this time. In the EU bloc, you've got the euro is now trading on its weakest level versus the US dollar in 20 years. Now again, that's on the back of sort of recession fears and fears of sort of slowing economies. What will be interesting to see if the ECB does actually increase interest rates in July. They've certainly indicated they would, in the sort of fight against inflation. But as usual, the ECB does appear to be late to the party pretty much every time. In Australia, the Reserve Bank increased interest rates by 50 basis points, and you expect a further 50 basis point increase in August. And that's as the Reserve Bank continues its fight against inflation. But certainly New South Wales doesn't seem to be able to catch a break at present. They've got renewed flooding coming through now. And again, in certain areas, they've had nearly a month's rainfall in one day. So you've seen vast areas of Greater Sydney being one flooded, and in some cases houses have been evacuated. But certainly for the Australian economy as well, sort of China reopening many of its sort of larger cities, that has seen a little bit of a pickup in commodity prices. Now here in New Zealand, Prime Minister Ardern and government been on a trip to EU, and they've managed to negotiate a free trade agreement with the EU. Now, while not managing to please sort of every party there, it does appear to be good news for the New Zealand economy. Although the government has come under renewed pressure and criticism for its visa policy, and that's come from one of the major high street banks, which has come out and said, really the government doesn't appear to be doing everything it can do. There is a vast sort of shortage in certain skill sectors. So it'll just be very interesting to see what happens in the next sort of 2 to 3 weeks, because certainly in the polls, the government, it does appear to be sort of falling in popularity as well. And given the sort of tough economic conditions, you've got house prices falling, you've got rising cost of living, it'll just be very interesting to see how it sort of plays through. Certainly house prices appear to be still falling, although interestingly the ANZ has cut its 2-year fixed mortgage rate. They cut that down from 5.8 down to 5.45. Now that's obviously quite interesting because it appears a little bit early to sort of start a mortgage war, but also as well potentially interest rates won't rise as high as people first thought as the economy does slow. Also as well, we've got rising cases of COVID now, and more importantly, rising cases of hospitalizations as well. Hospitalizations have shot up by around sort of 60 or 70 in the last sort of 3 to 4 days. And obviously with COVID, you've got the flu season coming through and sort of winter sort of illnesses. It's just going to be very interesting to see how it plays through in the next sort of 4 to 6 weeks. Especially given the shortages with sort of nurses and doctors, and sort of many hospitals pretty much working at capacity already. Now on the savings front, ANZ have got a preference share in the marketplace. That's a sort of 5-year with a 5-year reset. Indicative rate looks to be around sort of 7.12 indicative rate at present. But if you're looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.